The foreign billionaire who loved India is no more. Mark Mobius, the man who made immense wealth from risky and sinking markets. It was a morning in Singapore, but the news spread a strange silence through stock markets, fund houses, and dealing rooms across the world. The man who, for decades, kept investing in countries where other investors were afraid to go was no more. The fear was that the world of emerging markets had lost its greatest explorer. The curiosity was this: how did an investor who could find wealth in markets considered sinking, unstable, and risky learn this skill? And the story begins right there. The story of Mark Mobius, the man whom the finance world called the Indiana Jones of emerging markets. According to Reuters, Mark Mobius passed away on the 15th of April 2026 at the age of 89. Mark Mobius was no ordinary fund manager. He was counted among the earliest investors who did not see developing economies merely as poor or unstable countries, but as ground for future growth, undervalued companies, and long-term wealth creation. Where many big names on Wall Street stepped back on seeing risk, Mobius looked for opportunity. That is why his name became synonymous with emerging market investing. Both the Wall Street Journal and Reuters called him a pioneer of modern emerging markets investing. His investment philosophy was very different. He did not make decisions simply by reading reports, watching screens, or relying only on analyst notes. He traveled to countries, visited factories, spoke to local people, understood the political mood, and then caught the pulse of the market. According to Reuters, he traveled to at least 112 countries in his careers. It was this boots-on-the-ground style that made him different from other investors. This very habit earned him the nickname Indiana Jones of emerging markets. He did not study risk from a distance. He went into the middle of it and understood it. Mark Mobius was born in New York, but his identity was global. According to Reuters, his father was of German descent and his mother was Puerto Rican. He did not begin his career in finance. First, he saw the worlds of academics, consulting, and marketing. Later, he moved into investment management. Perhaps that is why his thinking was not like that of traditional fund managers. He did not see the market as only a game of numbers. For him, it was a mixed system of politics, society, culture, governance, and human behavior. His academic background was also strong. According to Reuters and several obituary reports, he earned a doctorate in economics and political science from MIT. Public reports about him also say that he studied at several universities, and that his intellectual interest was never limited only to finance. Perhaps that is why he did not read a country only through GDP growth or P/E ratio. He also looked at where its politics was headed, what its bureaucracy was like, whether entrepreneurs had confidence or not, and whether public mood would support growth. The real turning point came in 1987. That was the year when Sir John Templeton gave Mark Mobius the responsibility of leading one of the world's earliest dedicated emerging markets funds. According to Reuters and the Wall Street Journal, his long career at Franklin Templeton lasted more than 30 years, and he turned Templeton Emerging Markets Group into a major force in global investing. This was a time when emerging markets were not as fashionable as they are today. In that era, investing in Latin America, Africa, Asia, and Eastern Europe looked almost like madness to many investors. But Mobius found logic in that very madness. One of his biggest achievements was scale. According to the Wall Street Journal, under his leadership, Franklin Templeton's emerging markets business grew from the level of $100 million to more than $40 billion in assets. And in several reports, the broader group assets were said to be even higher. This was not just the story of fund size. It was the story of the trust that global investors placed in his judgment. When an investor shows consistent conviction in risky regions and then attracts capital for years, he no longer remains just a fund manager. He becomes a category creator. Mobius's greatest specialty was that he was not afraid of volatility. In fact, many times that same volatility became his chance to earn. Reuters wrote about him that even by the beginning of 2026, he was still talking about opportunities in troubled markets like Venezuela. This may sound surprising, but that was his style. Where everyone else saw collapse, Mobius asked, "Have assets become cheap here? Has market panic crushed value? Can the political cycle change?" His game was not that of safe, boring markets. His game was one of mispriced fear. That is why his name was counted among those investors who could see possibility even in something like a falling knife situation. But it is important to understand that he was not a reckless gambler. His method was not random betting, but grounded research. He traveled to countries, met managements, understood the regulatory environment, and took corporate governance seriously. That is why the impact of his influence did not remain limited only to returns. He was also associated with the World Bank's Global Corporate Governance Forum, and he had a role in the debate around governance standards as well. Even after leaving Franklin Templeton in 2018, he did not choose to stop. He co-founded Mobius Capital Partners and remained active even in his late 80s. According to reporting by the Wall Street Journal and Reuters, Even in his final years, he spoke openly about markets, remained linked to funds, and continued giving investment views. That in itself is rare. Many legendary investors become public memory after retirement, but Mobius did not allow himself to become just memory. He remained part of the market conversation till the very end. After his passing, naturally, a big question arose. Who will now handle the responsibility of the firm? According to Reuters and other reports, leadership at Mobius Investments, or the Mobius-linked platform, will be handled by John Ninya and 𝐟𝐸𝐿. It was also made clear from the firm's side that there would be no change in investment approach or day-to-day operations. The meaning of this statement is not just continuity. It also means that Mobius left behind not only a name, but a process, a discipline, and an investment culture. For India, Mark Mobius was not just a foreign investor. He was one of those rare global names who saw India not as a short-term trade, but as a long-term structural story. The Economic Times remembered him as an India bull, and even in recent months he remained bullish on India's growth prospects. For him, India did not mean only the stock market. He looked at young population, urbanization, consumption growth, policy continuity, and export potential together. In other words, for him, India was a demographic engine, not just a ticker symbol. In an interaction given to IANS in February 2nd, 2026, he had said that India's young population, rapid urbanization, rising consumer base, and export growth could help it soon become the world's third largest economy. In that same conversation, he also said that India has the potential to become the world's second largest economy as well, if reforms and policy continuity remain in place. This was not casual praise. Mobius was not the kind of investor known for headline-friendly optimism. His bullishness was usually based on field observations and comparative emerging market analysis. He had also expressed a positive view on the possibilities of an India-US trade deal. He told IANS that growing trade between India and the US could strengthen both large economies even more. He had also indicated that India's recent global trade engagement, including improving ties with Europe, could encourage the US too to move agreements forward with India. This viewpoint shows that Mobius considered macro politics and trade diplomacy to be part of his investment thesis. For him, stock market news was not a separate thing. It was an extension of geopolitics. His confidence in India was not new. For years, he kept saying again and again that India's strength lies in its people, especially its young population and consumption power. In his view, there was a difference between a manufacturing-led story like China and a consumption plus services story like India, but India also had its own uniqueness. He believed that if the governance framework, reforms, and business environment continued to improve, then India could take a trajectory different from the rest of the emerging economies. That is why many followers of the Indian market took Mark Mobius's comments related to India seriously. Another big lesson from his career was contrarian courage. He did not always move with consensus. Many times he chose the very markets that mainstream investors were ignoring. Many times he chose the very countries that headlines were painting negatively. But for him, being contrarian did not mean simply speaking the opposite. His contrarianism was research-based. He used to say that if everyone is avoiding a market, first understand whether the fear is justified or overdone. If the fear is greater than necessary, then opportunity may be hidden right there. It was with this very mindset that he made immense wealth even from markets considered risky and sinking. One thing comes up again and again in reports written on Mark Mobius. He did not just make emerging markets investable, he made them respectable. Today, for global funds, allocation to developing countries may feel like a normal thing, but there was a time when it was a peripheral idea. Investors like Mobius gave legitimacy to this space. He taught global capital that returns do not come only from the tidy boardrooms of developed economies. Many times they also come from chaotic, imperfect, and misunderstood countries. And perhaps that is his greatest legacy. With his death, the finance world has not just lost a veteran, but a rare field investor. In today's age, data terminals, AI tools, satellite images, and real-time analytics have made investing highly digital. But Mobius represented that generation which said, go and see first. He was not an investor limited to airport, hotel, and conference hall. He met people, saw the streets, and understood the local mood. Perhaps that is why there was a human texture in his calls. His investing style was a blend of spreadsheet and street. He died on the 15th of April 2026. But his story does not end as just an obituary. In the coming years too, he will remain a reference point for every investor who works in frontier, emerging, or distressed markets. Because Mobius taught that risk is not only to be avoided, it is also to be understood. And if the understanding is deep, that same risk can be turned into wealth. This lesson sounds simple, but very few investors in the world were able to live it with such consistency for half a century. Even in the Indian context, his passing is symbolic. At a time when India is presenting itself as a global growth engine, a major foreign investor who repeatedly expressed confidence in India. If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.